Hey everybody, welcome to the video, week number 7. This video is part 2. I did have a week 7 video out for a few days, but I rewatched it. I wasn't happy with it. I had a lot of stuff coming at you and I was flying through everything and there wasn't enough time to let it sink in. So we're going to have a nice easy pace from now on. This is the new format of the videos. It's going to stay like this. Just, hi, how are you? This is my portfolio. This is how it's performed in the past week. These are the stocks that I'm looking at for this week, and we're going to put $100 on the board, buy the stocks, then a quick recap of what our portfolio looks like, our performance versus the market, some stocks that I'm looking at for the upcoming weeks, and that's it. So let's jump right into it. We're going to start with our TFSA. I'm going to give you a quick recap of the 2 companies that I added to this week. I already purchased them because I did have a video out previously, but because we're reshooting this, I'm going to show you what I purchased and why I changed my orders from the previous video. Okay, let's go into that. Okay, so we're in our TFSA. I know about the glasses. They reflect. I know, whatever. 921.74. We're up $21. Okay, so it says 921 because I'll take them off. It says 921 because I have a $200 deposit that is pending, so 721 for all intents and purposes. Brookfield, nothing changed there. We have 4 shares. We're up 5.89%, even though we began purchasing Brookfield at $50 and the share price today is only $48.94. That is because of dollar cost averaging. That's a perfect example of why that is a good thing to do. It dipped down to 42 and we purchased all the way down, which brought our average cost to 46. So because it's 48, we're up $11. We're 6% now. We're up $11 because of that dollar cost averaging, even though it hasn't come back up to the original price that we started purchasing at. Canadian National is we're down on that. It's coming back up. I'm going to hold off on that. I know I spoke about adding to that position in the coming weeks, but there was some news out this week because of the acquisition with Kansas City Southern. I'll give you a quick rundown on that. Kansas City Southern has accepted Canadian National's offer. Canadian Pacific originally had an agreement with Kansas City Southern to purchase them. Canadian National came in with a more attractive offer. Kansas City Southern has accepted that. Now it goes to the hands of the regulators. And because of, rail acquisitions are always tricky. And this could drag on a little bit, and there's no guarantee that it's going to go through. There's no guarantee that the regulators are going to allow this, but Kansas City Southern is being proposed to put in, or Canadian National is proposing to put Kansas City Southern into a trust while this goes through. If it's not approved, Canadian National is still on the hook for $1 billion to the Surface Transportation Board of the U.S. I don't know why, I don't know where that money goes, but it's a $1 billion fee and then $700 million to Canadian Pacific for a breakup fee. That is actually paid by Kansas City Southern, but there's an agreement that Canadian National will reimburse them. So theoretically, this deal could be squashed, but Canadian National is still on the hook for $1.7 billion. So that has a lot of shareholders a little bit twitchy right now. I'm one of them. I'm not going to sell. I love this company. It's my favorite stock. It's the first stock I've ever purchased. I'm not going to buy any more for the time being either. I'm just going to hold it, and we're going to keep an eye on that. So that's where I'm standing with Canadian National. Power Corp of Canada, we purchased one more share last week, and that always does well. That's up 0.5%. They pay a good dividend. QU, we're up to 38. We're up on this stock, actually. This jumps up and down because it's a penny stock. No news out of the company. It's all positive. They're still acquiring good advertisers. The ratings are going up, so it's all positive there. The price fluctuation is just because of the day traders. They pop in and out of these stocks because of the volatility, so they're trying to make their quick buck. RioCan, we added one more of those. That we're up a little bit on that as well. They pay a good dividend, and I expect that to rise over the next few years back up to pre-pandemic levels, about $26, $27. TELUS, we did have an order for TELUS in the previous video that was deleted. I did pull that back just because I wanted to hold on to a little bit of that money. You can see we have $56.44 available. That's because I wanted to buy a couple more expensive stocks that I can't get with our normal $100 weekly deposit. So I built up the kitty a little bit more, and the way I did that was I took back that limit order I had for TELUS. So the tech ETF, Global Technology Leaders, no changes there. We're up 5% on that. That's another good one. And WSP, originally we bought that at 125. A week ago, it's already up 9%. We'll get back into that as well, but right now it's a little bit high. It shot up a little too fast for us, so we're going to hold off on that. Going over to the watch list here, I'm going to show you what I have planned for this week coming up. I'm going to get into some bank stocks. I'm going to start a position with BMO and also Royal Bank, which is the biggest bank in Canada. Oh, these are coming up. I don't want them to come up too high because it's very tight with our margins here. So I'm going to have 256 over the next 2 weeks, and these two stocks right now are 247. So we're good. We have about $9 to play with there. I'm going to make those purchases a bit later in the week. I'm going to film 2 more videos this week, and those videos will be released over the next 2 weeks because some of you may know from previous videos I work in the mining industry, so I'm only home for 2 weeks out of every 4, and the other 2 weeks I'm up in the Arctic where the internet isn't very good. I can't post videos from up there, so I'm going to record them here at home, and then I'll have them released in specific intervals. So that's where we stand with that. So that's our portfolio. We have 921.95. We're up 2%. Let's go to our spreadsheet here. Here we go. So you can see up in the corner here, the cost of our portfolio, $700, and our current value is $721.99. TSX, since we started this, is up 2.97%, and we are up 3.14%. So we are beating the market. That's one way to look at it. Another way to look at it is that if you were to buy an index fund, which is highly recommended by many people, you would be paying about a 0.2% management fee, which is nothing. But that 0.17% lead we have would become 0.37. So we are beating the market by 0.37. That's another way to look at it. The other way to look at it, which is how I look at it, is we're beating the market by 0.37. We're not really beating the market because if we buy an index fund, we buy it, we go to the beach, enjoy our life. This, managing your own portfolio, that takes a lot of work. All this work we're doing, how much is that worth to you? Is that worth 0.37%? Maybe, maybe not. If you have a very big portfolio, yeah. If you have a small one like this, maybe not. But for me, it is because I love this. I do research all the time. I enjoy it. I like the numbers. Some people when they go for a walk, they listen to music, they listen to podcasts or whatever. I listen to earnings calls. I listen to if I don't have any calls to listen to, I'll listen to some investment podcasts. But I enjoy it. So that 0.37% lead that we have over the index, it's worth it to me because this is more enjoyable. I do have some other portfolios where they're mostly index funds, and I don't have to worry about those. Those are good as well. But I do enjoy this aspect of it as well. So we're up 0.17 on the market. The ESG rating has come down. That's 18.69 now. I'm going to show you over here how I calculate that. So 2 of these stocks, ETF and QU, don't have ESG numbers. So last week they were weighted towards the number of shares, which isn't really an accurate representation. So this week it's actually weighted towards the total cost of each of these companies. So Brookfield, because Brookfield is most of my portfolio, 27.11. That's the biggest position. So it's going to have the biggest effect on the ESG. 21.9 is that number, so that drives that up. I have been adding to a lower ESG number of companies. We added Power Corp, we added TELUS, and we added RioCan. We're also going to be adding Royal Bank and BMO. Those are also low as well. So we're going to bring that number into the range that I'm happy with, 15 to 18%. So that is about it, I think. I've told you what we're planning on buying in the next few videos, but that can always change. I told you what we bought and the performance of the portfolio so far. So that's it. Thanks for watching. I'm not going to add any more bells and whistles to the videos. It's just going to be my portfolio, what I'm buying, what I bought. So And that's what we're going to do. Every week, $100. Click that link on the bottom if you want $10 into your Wealthsimple account. If you haven't used the referral code and you are using Wealthsimple, you can still take advantage of that. Or if you're planning to sign up, there's $10 to get you started. All you have to do is download the app and fund your account with $100 minimum, and you will receive that $10 real money. It's yours to keep. And I appreciate you doing that. And I also appreciate you watching the videos. Please like and subscribe. It really helps out. I appreciate it very much. I'll see you next week. Thank you.
Watch the video before this, and you can invest your money.